Hello traders, this is video number 14 and in this video I'll teach you a reversal trading strategy that will work on the fast moving market. Whenever you find aggressive move in the chart, you will use this strategy to place a successful reversal trade. But before going for the strategy, let's understand what is fast moving market and why does it happen and why does a reversal happen after these aggressive moves. So first of all, suppose if the price is moving like this in an uptrend and suddenly you find that price now is moving very aggressively in the upside direction like this, and this candle formed in just 1 minute. This is an aggressive move by the buyers. Similarly, in an uptrend, if you find a strong bearish candle forming in just 1 minute like this is also fast moving market, or you can say aggressive moving market, in which you can expect reversal. It can happen in 2 minutes like this, or it can happen in 3 minutes. Do not go more than that, because you want aggressive move in a short period of time. You will look for candle or series of candles moving very strongly in one direction, covering large distance in short time, which means we will prioritize the 1 minute candle forming aggressively. Like if you find a candle forming like this in just 1 minute, this is a good aggressive moving market and you can expect reverse. But if the same move you got in 2 minutes, then this is not that aggressive. So which means you can go up to 3 minutes of move. This is the upper limit. But if you are getting a 1 minute candle moving too aggressively, then you will look for the reversal trade. So our priority is to find one candle that is moving very aggressively, or maybe two candles that moved continuously. If you find three candles, then this is not a strong confirmation. Like if you find candles like this is not a strong confirmation, but you can expect a reversal. So I will advise you to stick with one candle or maybe two candles forming in just 1 or 2 minutes. Okay. Similarly, in a downtrend, if you find one candle like this is a good fast move and you can expect reversal. And if you find two candles forming in 2 minutes like this, you can expect reversal, because the chances of reversal are there. But if you find three candles like this, you can expect reversal, but stick with one or maybe two candles, because these aggressive moves gave aggressive reversals also. When price moves aggressively but it takes time, then you can expect that reversal will happen, but it will not be that aggressive. So we are expecting an aggressive reversal also. So stick with one candle or maybe two candle, which means that if you find one candle forming in just 1 minute like this, you will look for reversal trade. If you find two candles forming in 2 minutes, each candle formed in 1 minute, you can expect reversal, but the move needs to be aggressive. Ideally, price should move 2 to 3 times at least to the average candle size of the last 10 to 20 candles. I'll explain you in the chart also, so don't worry about it. So now you understand what is aggressive or fast move. Let's understand it in the chart, how to look for these kinds of candlesticks to go for a reversal trade. Right now I'm looking at Euro US dollar chart, and in this chart I have one example. You can see this candle, this bearish candle is strong and it moved very aggressively in the downward direction in just 1 minute. If you compare it, the size of this candle to the previously formed candle, you can say this candle is approximately 6 to 8 times larger than the previous candle, which means this is an aggressive moving candle. It's a fast moving market, which means you can expect reversal, and you can see here after that price reversed. Similarly, let's find more example. Here in this case, you can see this is a bullish candle. It formed very aggressively. This is a big candle, and you can see that this candle is bigger than the previous 30 candle, and the size can be around 5 to 8 times larger, which means that this is a fast moving candle and you can expect a reversal here as well. Here, if you look carefully, the price started moving from this level and it closes here, but the next candle also goes up, which means this is a 2 candle pattern in which the price reversed from the top. This is the top. So this is how the price moved in just 2 minutes. So this is an aggressive candle. If you compare the size to the previous candle, you can say that this candle is at least 5 to 8 times larger. We only need 3 to 5 times large candle to identify a reversal, because when you find a candle forming at least 5 to 8 times bigger than the previous candle, you will find that price reversing instantly. Here also, look at the size of the candle. This candle is of this size. Compared to the previous candle, you can say this particular candle is at least 3 to 5 times bigger, which makes it a aggressively moving candle, which means this is a sign that price can reverse. Now that is how you can spot these candle, and if you spot these candle, you can expect a reversal very soon. Now as I am saying that you can expect a reversal very soon, you have to understand why these reversal happen, because you have to know the reason why reversal happens after these aggressive move in the chart. So when price moves very fast in one direction in a short period and then reverses like this, it usually due to one or more of the following reason. The first reason why these reversal happens after this aggressive moving candle is because of the exhaustion of buying and selling pressure. Whenever you find price moving in certain direction, like in this case, the price moves upward very aggressively, it happens because so many buyers put buy orders very aggressively, which makes the price to go through the roof and reach this particular level. Which means when there is extreme buying pressure, you will find these kinds of aggressive move in the chart. But once that buying pressure dries up, price will have to reverse. That is the natural tendency of price. When nobody wants to buy at this particular level, the price will have to reverse because the buying pressures will go down, the buying orders will go down, and that's why the sellers will take control and they will then reverse the price. So the first reason why the reversal happens is because of the exhaustion of buying and selling pressure. Previously, buyers were pushing very strongly because there were enough buy orders to push the market in the upside direction. But when the price reached this particular level, there were no buyers who wanted to place buy orders and wants to take the price in the upside direction. And that's why no transaction happened above this level, and that's why the buying pressure gets weaker and seller took control and they push the price in the downward direction. This is the natural tendency. Now this is the first reason why this happened. The second reason why these reversal happened after these aggressive move in the chart is because of the profit booking. Traders who entered here wants to book their profit here because they placed a buy order at these levels so that in future they can book profit, they can sell at the higher prices, which increases selling pressure, which makes the price pull back or give reversal. So the second reason is when trader starts booking profit, the price will have to reverse because it increases the pressure on the opposite side. Previously, the buying pressure was huge, but at this point, because of profit booking, the selling pressure is high, so the price needs to go in the downward direction. The third reason why this reversal happened is because of the presence of liquidity zone above or below or institutional orders which are pending. Suppose if the price is moving like this and here at this particular zone you have institutional order. Let me draw it like this. So you have institutional orders, pending orders which are waiting to be filled as soon as the price hit that zone. When the price is moving aggressively in the upside direction and suddenly there are so many pending sell orders available, what do you think will happen? The price will have to reverse because the selling pressure will increase. The number of sell orders will outnumber the number of buy orders, and that's why the price will have to reverse. So these are the three conditions that can cause the price to reverse when the price is moving aggressively. First one is exhaustion of buying and selling pressure. When there is a fast move, the buying pressure pushes the price up, but at some points the buyers lose interest because nobody wants to buy at high level, and that will make the price to go down because the buying pressure dries up. Second one is profit booking. Traders who entered earlier wants to book their profit, and when they start booking profit, the selling pressure increases, which makes the price fall again. Last one, presence of liquidity zone or institutional order. When price is moving in the upside direction and it hit a selling zone, a liquidity zone where institutional sell orders are waiting to be filled, you will find that as the selling pressure is high at these zones, the price will have to reverse. Now you understand how to spot aggressive move, why these reversal happen. It's time to understand how you can use these aggressive moves to place successful reversal trades. Before telling you about the strategy, you should know few reversal pattern that you can use as a confirmation to place your reversal trade. So we have 4 examples here: bullish engulfing pattern, bullish inside bar formation, doji candle or morning star, pin bar pattern. These are the bullish reversal pattern, which means that if the price is moving in the downward direction, you will look for these kinds of pattern to place reversal trade in the upside direction. Similarly, these are bearish reversal pattern, bearish engulfing candle, inside bar formation, evening star and pin bar pattern. You will use these kinds of pattern to place a reversal trade in the downward direction when the price is moving aggressively in the upside direction. For example, the price is moving like this, you will look for bullish reversal pattern here so that you can place your reversal trade in the upside direction. Similarly, if you find price moving like this, you will look for bearish reversal pattern here to place a reversal trade in the downward direction. So you are going to use bearish reversal pattern like engulfing candle. You can memorize it. Inside bar formation, doji candle or pin bar to place a reversal trade in the downward direction. And similarly, you will use bullish reversal pattern like engulfing candle, inside bar, doji and pin bar to place reversal trade in the upside direction. These are the reversal pattern that we are going to use to place our reversal trade in the 1 minute time frame. So now you understand the reversal pattern also. Let me give you the strategy, which is very easy to apply. The strategy is very simple. The first thing is you have to find candle or series of candles moving strongly in one direction, covering large distance in short time. In this case, we have this strong candle. It formed in 1 minute. It covers quite good distance, which means this is a fast moving market. Once you have a fast moving market, you will look for candlestick confirmation on smaller time frame. This is a 1 minute time frame chart, and to place 1 minute reversal trade you have to switch to the 5-second chart, and you have to find, in this case, bearish reversal pattern. So let's switch to 5-second chart, and here what you have this strong reversal pattern which is bearish in nature. It shows that price now will go down, and this is the point where you will enter your 1 minute reversal trade in the downward direction. This is your bearish reversal pattern, and this is the confirmation that now the price will go in the downward direction. Similarly, what you have this particular candle. The move was from here to this particular level. This is a strong move in the market in just 2 minutes, meaning you can expect reversal. Although this candle formed as a bearish candle, but at some point the price was here and after that it reverses, which means the price from this zone to this level took around 1.5 minutes and then it reverses also. So this is a strong move. Let's see the 5-second chart. What happened on the 5-second chart? And on 5-second chart, what you have this reversal pattern. Once you have a reversal pattern on the 5-second chart, you will enter here for 1 minute expiry and the price will go down and you will book profit. Let's find more examples. The price in 2 minutes went from this particular high to this particular low, and this candle, if we compare to the previous candle, can say that it is at least 3 to 4 times bigger than the previous average candle size. So this is an aggressive move. Let's see what we have on the 5-second chart. And on 5-second chart, what you have this reversal pattern, and here you will enter for 1 minute expiry. Let's find more example. The price move happened in these 2 minutes. This is quite big. You can say it's around 3 times the previous average candle. Although this is not a perfect example, let's see how the price gave confirmation on this particular time. And here, look carefully. You can say that this is your confirmation, or you can also take this as your confirmation. So you have confirmation. Both are almost at the same level, and you can place your trade here for reversal in the upside direction. And here we have this good example. You see this candle, this moves quite aggressively. This is how much it traveled in just 1 minute. So this is an aggressive move. Let's check the 5-second confirmation. Here, is this your confirmation? Well, no, this is not a strong confirmation. Where is your confirmation? These 4 candle is your confirmation. This is the indecision. This is an aggressive move breaking the low of this previous candle. This is your reversal pattern, and after that you can place your reversal trade. Price will fall. Let's take this last example. You can see this is a strong bullish candle. It formed in just 1 minute. If you look at the size of the previous candle, they are smaller, which means this is an aggressive move. Let's see if we have 5-second confirmation, because once the price starts moving aggressively, all you need is a 5-second confirmation. This is a strong move. Let's see if we have 5-second confirmation or not. Here you see price was moving aggressively here, and you didn't have any confirmation here. No confirmation, no selling confirmation. A strong confirmation is required, but you have a confirmation here. This is a strong confirmation. If you combine like this, you will say that this is a strong confirmation now. Previously the buyers were active, then consolidation, and then sellers took over, because we are expecting the selling will happen at some point, and that's why this confirmation is a good confirmation. You can go for a reversal trade in the downward direction, and that's how you can use this strategy to place a reversal trade. Now that is it for this strategy, but the most important question here is that can you win 100% of the time by using this strategy? To answer that, you can never win 100% of the time, because the price doesn't move according to a mathematical formula. You have to accept that price sometimes will give you false signals and you will lose trade. No matter what strategy you are using, until and unless you are winning more than losing, you will make profit, and this strategy can give you more winning trade than the trades you will lose. So ultimately, if you apply the trade, if you apply the strategy correctly, you will make a profit in this strategy. So that is it about this strategy, and in the upcoming time I'll bring 1 or 2 more strategies. Make sure that you focus on one strategy, stick with it and try to practice it. It will take some time to master these strategies, and even after mastering these strategies, you have to follow money management, trade management, then only you can survive. So make sure that you follow money management, trade management, and try to practice strategies, because losses are part of the game. Do not think that you cannot lose, and even if you master these strategies, you will still lose. I myself lose trades because there is no perfect strategy in this world. All you have to do is to follow the money management, trade sensible, and then you will be profitable at the end of the day. So that is it for today. We'll see you very soon in the next video.